I'm here in Dallas for REIT World 2011, NAREIT's annual convention for all things REIT. Joining me is Tom Toomey, President and CEO of UDR. So Tom, your company's gone through quite a bit of activity regarding acquisitions, development, redevelopment, dispositions. What's been the focus of these efforts, and is there more work to be done?
Well, Matt, it's a great question. 2011, it's not over yet, but it's been a great year. And so far we've done over $4 billion of transactions. When you break that out, we've done $2.6 billion of acquisitions and sales activity, and we've grown our development pipeline to $1.1 billion. What's driving all of that and what's next? Well, certainly what's driving it is the fundamentals of the business look great. And we feel very confident about them, not just in a short-term, but a long-term perspective. And it feels great to be growing our enterprise. And we're finding a lot of opportunities that fit our value creators.
Now, drilling down a little more specifically, your company spent close to $1 billion in just New York City alone. Why is now the right time to expand your New York footprint, and are there other markets that you're targeting?
If you break it down, they're 4 separate transactions, but they're really 2 different strategies. In one case, half of that is down in the financial district right next to the World Trade Center. And clearly you can see that it's being rebuilt, that all of that office space that's being supplied down there will be occupied. And what you find when you look at the submarket, there's very little housing. And so we decided to make a significant investment, a little over $600 million, in buying 2 buildings right down in the financial district, and we think we're going to benefit as those office space. The other 2 turn out to be really properties that are very unique in the sense that they're about 25 years old, that the owner developer, who's the operator, really reached a point where he says it's time to sell, but we found was they're undermanaged and potentially have a great deal of upside in a redevelopment.
Now, in your first answer, you talked a little bit about the company's development activities, and that seems to be a common trend among the apartment owners, that development is now ramping up after several years of a limit in new development. Is there any risk with all these companies getting shovels in the ground that what is now an undersupplied market could become oversupplied?
I think that's always been there. I've been at this 20 plus years, and certainly what I've always seen is we as developers and as an industry tend to overbuild to our demand, if you will. Is it at risk? It doesn't feel like that right now. I mean, if you look, we're coming off generational low development activity of 150,000 doors across the country. And the second is that seems to be growing, but even if it doubles, it's not going to keep up with the demand side of the equation. The demand, if you parse out the numbers between now and 2015, 16, it looks like there's about 4 or 5 million renters on top of 40 million. So there's almost this 10% demand built in over the next 4 or 5 years. We can't build enough to meet that demand. So I'm not worried about development right at this point.
Now, I'd like to end with a 2-part question. Looking at 2012, what has you the most optimistic, and on the other side, what has you the most concerned?
In the case of 2012, just over that time horizon, the most optimistic is our business is getting better. That as we look at 2012, we see our operating platform getting better, delivering more cash flow, meaning our dividend's going to grow. And we think all our value creators, being operation, development, redevelopment, all have a great number of opportunities in front of them. What worries me? What worries me is that we've seen over the last 4 or 5 years the introduction of a new variable into the business model, meaning Wall Street's volatility and the interconnectivity of the world and the news media cycles, creating very, very volatile periods. What I have turned, and we have as a management team have focused on, is volatility creates opportunity. You can either shy away from it, or you can embrace it and say, when the market overreacts, if we're a long-term investor and we see value, we should jump on it. And I think you have to look at the world that way, as every day is an opportunity. Where do we want to spend our efforts, and does it help our shareholders?
Tom, thank you so much for joining us.
Thank you.
For more from REIT World 2011, be sure to visit REIT.com.